Okay, folks, welcome to another Thursday Night Stock Charts Live. The weeks go by like this. A crazy, crazy day today. We're going to talk about the whys behind the sell-off. And, of course, we're going to talk about the weekly charts. And I'll give you a forecast of what's next for this market, assuming that we close at where we're at right now on the week, slightly better or worse. And it ain't good. We'll talk about how we did so far this week, what our week's been like. We've done some earnings trades that worked out well. We did one tonight. I didn't get my full order on it. Net, which is Cloudflare or something like that, whatever. Net, what is Net? Cloudflare, I think. Yeah, Cloudflare. Yeah. We'll talk about the Fed's balance sheet. I'm going to recap what I normally do on Sundays. I'm doing it tonight again, just as a reminder, valuations, where we're at. So let's get to it. Before we begin, let's begin with a shout out to our sponsor, TrendSpider. I actually just did a presentation for them. They asked me to do a review of my thoughts on cryptocurrency, and I said I'll do the presentation. We recorded it last night, and it's going to be about cryptocurrency and the correlations that crypto or Bitcoin specifically trades along with, and my favorite short if Bitcoin pulls back. And that's coming out on the 26th. But I may give a sneak peek to viewers of my favorite short because I'm ready to pull the trigger on the short. Maybe I'll even go over it tonight. Not quite sure. See how much time we have. All right. So, folks, don't settle for ordinary trading software. I got to tell you, I was using TrendSpider on mobile today. I was kind of off grid. Where's my phone? I don't have my phone with me, but I have the app on my phone, and I was looking at the weekly chart of Nugget, and I said, holy cow, I got to get home and take a look at this chart. By the time I got home, it had rolled over $3. So it's an invaluable tool to have. So automate your grunt work, speed up your technical analysis by using algorithms, folks. If you don't know how to draw trend lines, support levels, resistance levels. If you need a tool to help identify pattern recognition, if you need a tool to help you set up trades, meaning alerts, which we're going to go over tonight, I'm going to demonstrate. If you want a scanner to help you find opportunities, TrendSpider, it's for you. I get a 35% discount, so use the link below. I'll put the link out there. And there it is. Use the link below, and you'll get TrendSpider. Let me go to some comments here. Falcon, hey, brother. I jumped into Diz at 159 like a fool. I didn't track it all day. We did an earnings trade on that using options. We did a Strangle. That's going to expire worthless tomorrow. If you want, we'll go over it. Where's my pen? There was my pen. So I got to go over Joe for Franklin. That's the ETF for coffee. Diz. We'll take a look at it. We will brainstorm a strategy. Larry, have we ever faced three bubbles at the same time? We have a froth in stocks, housing, and bonds. I wouldn't call the financial crisis a bubble in stocks. Housing, of course. Bonds to a certain extent. No, to answer your question. Not that I recall. It's a dangerous time. I implore the Gotham Police Commission to get the bat signal ready. We're doing that tonight, brother. There are times where people go, technical analysis doesn't work. You're always a doom and gloomer. Folks, the charts send you a signal. They don't, it's not a crystal ball, but they send you a signal that things are unwell. So we're going to go over those charts tonight. So stick around. Things are unwell. So get ready. We put on, in fact, during this this rally, we went short of the semiconductors, the leveraged ETF of the semiconductors SOXL. We put on a short trade. I think it was the day before yesterday. Yeah, it was the day before yesterday. Then yesterday we added more using TrendSpider right here. And it nailed it perfectly. I did not draw these trend lines. This is the algorithm. So I sent out an alert last night as we hit resistance. I didn't hit it. I didn't use the first line of resistance. I waited for the second. And sure enough, we put in a new daily high today. What did they do? They sold into it. We are now profitable on this trade. So thank you to TrendSpider for that. So I think that we're going lower. So we're going to go over the semis in a greater extent in a little while. So let's begin with finishing off the comments, which I began. Evening, Bob. Chatter about emergency rate hike according to Zero Hedge. We're going to talk about that, Eric. Yeah, that's certainly one of the main reasons why we sold off today. Hey, Paul, welcome. RB, welcome. Good evening, Bob. Crazy, yeah. We got small today. We got small. Trader Isaac, no, I just haven't had the time. I had to get some ducks in a row today, so I did not have the time to set up Rumble. It's really wonky how they set it up. I'm gonna probably ask to have their help desk help me out, but it's gonna happen. You got it on Diz, I guess. Bull killed the market, even though he's not a voting member. You know, the market was looking for a catalyst to go down. We're in a downtrend. So when you get a counter trend rally, that March rate hike is that thing off in the distance. All of a sudden, they found a reason, a catalyst to send the markets down lower. You know, we got through the CPI report. I'm kind of surprised we rallied off of that number, but we did. And yeah, it sounds like Bullard really nailed it today. And most people don't even know that there's voting and non-voting members. So BKKT. ARC. Okay. Tesla, we're going to be looking at short. Eric, I made some decent money trading Nugget earlier this week. Yeah, so do we, but unfortunately, we gave a lot of it back. I don't know why. Yeah, I do know why. There's such a misperception about gold, and I'm going to talk about it. I mean, it's really utter nonsense that they sold off the gold stocks today. It's an opportunity. I have enough of it. I really don't want to go buying more. I like to set up earlier in the week. Rarely do I buy options. I bought the options. They took off. I should have booked profits yesterday because today it pulled back. UEC. Okay. Hey, Forrest. BFB. Is that is that two? BFB? All right. DWAC, you don't have to be a congressman to become Speaker of the House. For transparency, we own DWAC. Good evening to you, sir. Okay. Let's do this. So it's clear that so it's one. I'm confused about the forward slash. Can you just clarify that? Okay. All right. So stocks tumble. Bullard, 50 basis point rate hike. Why can't they just say a half point? This is what Wall Streeters do. These elitists, 50 basis points. It's a half point. It's a half point. Talk like this in New York, and they're gonna get jacked. So yeah, this is the pin. This is the pin that popped the recent counter trend rally. We're probably going lower. I'm reading the comments here. Fed's Bullard favors a full basis point increase by July 1st. So what? So what? That's nothing. That's absolutely nothing. Bullard favors first half point rate hike increase since 2000. I didn't check out the yield curve today. I'm telling you right now, this is, if they do it, they're putting us into a deep, deep recession, because the bond market is saying, no bueno, man. We're going into recession right now, and you're going to jack up rates a full point by July. The stock market's going to be doing this. Inflation's doing this, and you're going to jack up rates? I don't think so. Not that aggressively, though. They're going to have to jack up rates, but not that aggressively. And for gold traders out there that are selling their gold in the mining stocks, you got to stop. You got to stop. This is an opportunity. This dip may be your last opportunity. It's crazy. And I'll tell you why. This is another headline. Whispers of an emergency Fed rate hike as soon as tomorrow, meaning Friday. Okay. So what? So what? They should have done it last month, but they didn't. So let's war game this. So this is a chart of the Fed funds rate. If you're a money center bank and you want to go to the Fed, this is the interest that you're going to pay. So Fed funds relative to inflation are negative. Negative. If they jack up interest rates by a percentage point, let's say 2%, by the end of the year, we're still negative. Inflation is at 7% and rising. You have the Canadian border, which is shut down. Do you know how much manufacturing and commerce goes through those bridges and those roads? A massive amount. A lot of the U.S. made cars are made up in Canada. So you jack up these interest rates, and the reason why I brought that up is that it's inflationary. It's inflationary. Shortages are inflationary. So if you jack up the Fed funds rate by 2 basis points, well, okay, now you're at 2.75%. Inflation's at 7%. Here's the Fed funds rate versus CPI going back to 1979, 1980. 82 when they finally broke the back of inflation. That was Paul Volcker. You have to get the Fed funds rate above inflation to kill inflation. That's what you got to do. They haven't even started to taper yet. Well, they have started to taper. They haven't started to reduce their balance sheet. The only admission, the only thing I'll give the Federal Reserve is that over the past couple of weeks, they have slowed the rate of bond buying. But the fact that they are buying bonds is, in fact, inflationary. They are killing the dollar, which, in fact, is inflationary. So the analogy I like to draw is this. Your house is burning. Inflation is the fire. You call the fire department, the Federal Reserve. They pull up. They take their hoses out, but in lieu of spraying water, they spray gasoline. That is what they are doing right here, right now. This is reported as of yesterday. The Fed's balance sheet hit a new all-time record high. They are not serious about jacking up the Fed's funds rate to get above where inflation is. And they have a long, long way to go. And the problem for the stock market is this. It's extremely expensive. We have a valuation which is at highs not seen since the dot-com. And this is the deflating of the dot-com bubble. Do you see a, how do I put this? A similarity between this peak and this peak? We're rolling over already. Valuations are coming in, but we're still very overvalued. The stock market is currently 59% overvalued relative to, or 1.9 standard deviations beyond the historical norm. So either GDP, because the Buffett indicator calculates in the GDP as measured versus I believe it's the S&P 500, to calculate what the Buffett indicator is. So either GDP has to expand dramatically, which it's not going to do, or valuations have to come in. And they're going to raise rates into a weakening economy as measured by the yield curve. This is the only chart you need to look at to see what the economy is doing. It's shocking, folks. We're in a very, very bad predicament right now. So as we always do, I want to go over the weekly charts. I want to save enough time as possible to go over your symbols because this time is really for you, and I want to try to help out as much as possible. Let's talk about the economic data that's been released so far this week. NFIB Small Business Index missed. Still a respectable number, but it missed. That's a sentiment index of small business owners. Inventories rose. Why are inventories rising? You have the president going out, pounding his chest. The economy grew. It grew so fast. No, the economy reopened. Despite you shooting holes in the bottom of the rowboat, the economy is reopening. And the only reason why wholesale inventories rose is because they're stocking up in advance of inflation and shortages. That's why wholesale inventories rose. Initial jobless claims. They declined today. That's good to see. Inflation, CPI. This is month to month. This is a big beat. A big beat. A lot hotter than what was expected. Now we have consumer price index at 7.5%. And this is not measured the same way it was back here. Where's that chart? Back here. Right now, if they use the same calculation to measure CPI, the Consumer Price Index, inflation would be at 15%, double digits. So we are at highs in inflation right now, higher than back in the great inflation period of the 70s and into the early 80s. It's bananas. All right. Tomorrow we get University of Michigan sentiment survey. Not a huge market mover. Let's get to the charts. First, let's stop with some comments here. Now, the Michigan governor is complaining about shutdowns. She's complaining about shutdowns. She's the one that shut everything down. When are you going to move to Florida? As soon as I possibly can. NY Jets, the roof, the roof is on fire. Franklin, hey brother. I have sand and gold. Would you bother moving that money to Nugget? Oh, sand. That's a symbol. I was like, sand. I'm not exactly sure what sand is. Is that a gold mining ETF? Hi, Bob. Do you think this is a year will be bullish or bearish for equities? Equities bearish. I think that we're in for a big shock. We're in for. I think we're going to reprice. We've already started to reprice. How you doing, Mohammed? Good to hear from you. Okay. So Muhammad's question here. It's a good question, and it's good. It's a good segue, right? Bullish year, bearish year, and I know a lot of people are out there, and they're saying, this guy does macroeconomics. I watch other guys on YouTube, and they just talk about the stocks and what to buy, what's hot, what's not. If you're not looking at the bond market, you're going to blow up your account. This chart here, and I always like to say this on a Thursday night, we're about to go over weekly charts. How are we poised to close out the week? We have one trading day left to go. A lot can happen. But as it stands in this period of time, the 10-year yield is flashing a massive, massive breakout. And if we close above this line, where we're at right now tomorrow, it's the fulfilling of a inverted head and shoulders setup. Left shoulder, head, right shoulder. You could argue if you wanted to use a 45-degree neckline, if you want, you could argue that if we were using this 45-degree neckline, we've already broken out of it. So horizontal, vertical, whatever you want to do. Either way, we have broken out on a weekly time frame out of an inverted head and shoulders setup on the 10-year yield. What does well when the 10-year yield goes up higher? Industrials, banks, transports. What does not do well? Utilities, technology. So all these high-flying stocks, the ARC funds, which we're going to go over in a moment, that have done really, really well during this very weak, accommodative economic environment, they are going to get repriced. And don't forget this chart. We are here. This is where we should be, down here. This is a 59% move above historical trend. Now, what normally happens when you get a bubble that pops, you don't just retrace back down to historical trend and stop. No, that's not the way it works. The markets move in extremes, extreme overbought to extreme oversold. So just like back here in 2000, when the bubble broke, well, we crashed right through fair value and traded down below it because that's capitulation. People are afraid. They want out. All the newbies that came into the market after COVID with their COVID bucks, they're going to get wiped out. Most of them are going to get wiped out. If they're not watching this show right now and they're not watching the bond market and they're watching YouTubers talk about the next SPAC that's going to blow up and move up higher and make them wealthy, I'm sorry, you're going to get wiped out. So just when you think that we've hit a low and the market can't go any lower in a bear market, it does. So let's get to it. So knowing that the 10-year yield, which hurts technology a lot by breaking out, and remember, I shorted this week very heavily the semiconductor stocks. We are now profitable on that trade given today's pullback. We are shifting gears. Did I sell my gold stocks today? No. I did close a call option trade, but that's very speculative. So we don't want to be speculators right now. We want to pull in our horns a little bit. We had a bullish environment coming into the week. Now it's not so bullish. And even though I'm bullish on the gold mining stocks, when margin calls go out, everything goes down. Everything goes down because people sell what they could sell. Forced liquidation. Sand is hey Mike, Sand is a company that just has gold royalties. Interesting. So I guess it's a high yielder. I want to pull up that symbol, see what it yields. Do you think S&P will pull back to? Oh, no doubt. I think that's the next level we're going to. Remember why? I got to go back to this chart. In fact, let me do this so I don't get everybody dizzy by toggling back and forth. And if I go over tonight, no big deal. We'll get to symbols and whatnot. But the goal here, folks, the reason why I'm spending so much time on the whys, I'm bearish on this market, the better, because hopefully you'll get some value out of it. And if you want to, I can't give financial advice, but if you want to take some of the information, put it at the back of your head, ask your financial advisor, see, is this the right thing for me? Is this guy right? Most of them don't even know. But is he right? And just go quiet. Listen to him. Or even this, you have a financial advisor, ask him what his strategy is for preservation of capital during an inflationary environment. Ask him what does well in a rising interest rate environment. If he can't tell you in 10 seconds or less, he doesn't know what he's doing. So let's go back. Here was COVID, right? So COVID hits. What does the Fed's balance sheet do? Rips up higher. But what are they doing now? They're talking about rate hikes as soon as possibly tomorrow. They're certainly slowing down their bond buying, but they're still buying bonds. But you have the law of diminishing returns. Even if they continue this into the summer, they need more to keep the bubble going up higher. This is the S&P 500. Because what fueled this rally off of the 2020 lows was this financed by, or I should say, excuse me, let me rephrase. What drove this rally here off the lows was not necessarily the Federal Reserve. Remember, the first couple of times the Federal Reserve said, yeah, we're going to cut rates a half point, quarter point, emergency rate cut. The markets rallied. They ripped up higher. What do? They sold off hard. Federal Reserve then went to Congress and said, listen, we don't have enough gunpowder here. This is going to get bad. You guys need to start spending. That's when the stimmy checks came out. What did people do with their stimmy checks? Went right in here, a lot of it. Who financed all that spending? The Federal Reserve. These are the stimmy check moves. But what they're doing is now they're ending it. So if The reason why the S&P 500 rallied off of these lows was because of this going from the lower left to the upper right. What happens to this, the S&P 500, when this chart starts going from the upper left to the lower right of your screen? You don't have to be a rocket scientist here, folks. The economy is slowing. I shared with you the chart of the yield curve. The bond market is sending you a signal right here, right now, that the economy is in free fall. Free fall. They wanted to pound their chest last week about creating 447,000 new jobs for the month of January, and they even increased higher the prior month, December. A, that's not creating new jobs. That's people going back to work. B, and this is why I say the economy is in free fall. Let's do the math. 223,000 times 4 equals. These are initial jobless claims, folks, over the course of a month. Yet they want to pound their chest about having 447,000 jobs. Those are people just coming back to work. We're still losing nearly 1 million jobs a month in this country. That is why you are seeing this, the bond yield possibly getting ready to invert. Love the salty army. Love the salty army. Welcome. That's a 40% pullback or so. Back to the 2000 levels? Yeah. If that's the number, that's the number. The real damage from higher rates tends to occur later in the rate cycle. We are far from that point. I think bullish rally will continue this year. Let's go over the charts. We'll talk about that. In the end, I don't have a crystal ball. I can't tell you like the slick back salesman on Wall Street about what a stock's going to do a year, 2 years from now. I have no clue. I have zero clue. Neither do they. But their job is to convince you that they have more information than I do or that you do. I can only tell you what I'm seeing in the short term setup here, and it ain't good. And I can only share with you what drove this market up higher is now beginning to get pulled away. Now, what's going to cause me to say you're right, Zachy, by the end of the year? If the stock market goes into free fall and you have the stock market impacting, of course, 401ks, driving them down, we're going into the 2022 midterm elections. Don't be shocked if they come back after they cause a sell-off in the stock market. The Federal Reserve steps back in and they start buying more bonds. They restart QE. They cut rates because now they have to say, we're in a recession, we have to cut rates. Then your argument could be right. But you're going to need the Federal Reserve. We're no longer a capitalistic society. We are a credit-based financial society. You got to have cheap money. Florida is awesome. I hope we don't lose DeSantis. I think we'll be downward punished if we do. I hope he runs for VP. Great guy. Great guy. Send Mike a message there, okay? Trader Isaac. Don't you think they will stop raising rates well before COVID lows? There's an election year and Dems will get crushed more than the market if they continue to raise with market crashing. Here's the problem, right? So, you're thinking logically, and not everybody is in the stock market. The inflation, the way you got to think about it, they want inflation because they want to inflate away 30 trillion in debt. The problem is that inflation is a secret tax. It's a silent tax on the consumer. So the problem is that when you have people walking into the food aisle of their grocery store and those prices day after day, week after week move up higher, it hits the lowest of the income earners the most, and they vote. So I think that they're in a big they have a big problem. Either they let the stock market crash and raise rates by raising rates aggressively, or they let inflation run hot and they allow the stock market to move up higher. I think that they're going to have to try to find a balance, and either way, stock market's coming in, and it's not going to be enough to fight inflation. I think they're screwed, to be honest with you. I think we're all screwed. We dodged a bullet for sure. If Omicron didn't come along and fix everything, you're right, it did fix everything. Florida might have been the last stand of liberty and freedom. Very true. Bob, am I wrong by saying that you have $1 trillion of stimulus money shoveled into stocks, creating a high price market? If it tanks, it's like burning. Oh yeah, no doubt. All it was, you got to think of it this way, is that you have the blue coast and you have the west blue coast, you have the east blue coast. A 10 square mile radius of Silicon Valley has multi-trillion dollars worth of valuation. So those people there, those companies there, they got a lot wealthier. That money went to them and the people that own their shares. So the rich got richer, the poor got poorer because now they're in debt and they have to fight inflation. So it was the single largest transfer of wealth in human history. And now the bill is coming and it's going to be the small guy that's got to pay for it. It's horrible. Okay, let's get to the charts. Good question, Falcon. Okay, we went over the yield curve. We went over the 10-year yield. It's breaking out. Watch this, folks. Watch it carefully. Bond prices, as you might imagine, they have a head and shoulders set up, left shoulder, head, right shoulder. So if we're breaking out on yields, we're breaking down on price. That's the way it works. There's no shock here. We're going probably lower. The chips, for whatever reason, they're selling off. I don't know why. I think that the chip market, this is the Treasury Inflation Protected Security, they have the same mindset that gold traders do, that the Federal Reserve is going to crush inflation. They're not going to raise it enough. They're not going to raise rates enough to fight inflation. You got to get the Fed funds rate above inflation to crush inflation. They haven't even started raising rates yet. Hey, Talon, we didn't go over gold yet. You didn't miss anything, pal. Okay. So the chips, they're selling them off. I think this is a wrong move, a boneheaded move by sellers, but it's their money. The dollar. Okay, so let me make sure this is updated. Yes, now it's updated. The dollar broke down the week before last. So we had broken out, and now we have given up this this breakout. It's got support at the 200 period moving average. Why is this important? It's important for a couple of reasons. If you like inflation, you're buying gold, you're buying silver, you're buying commodities, Franklin with Joe. Uh, Anything that you could drop on your foot, as Dennis Gartman likes to say, and hurts, you want to own. But those commodities are priced in US dollars. So if the dollar rises, commodity traders sell because they're afraid of a rising US dollar. So that's one of the reasons why today you saw the gold mining stocks in particular get hammered. Well, once traders realize that the Federal Reserve is not going to do enough to fight inflation, it's a joke what they're planning on doing. Even if they raise it by a half point, it's nothing. It's a joke. Inflation, they'll be at 0.75%. Think about it. Who's the bigger room? Inflation. So as soon as they realize the Federal Reserve is not going to do enough, the dollar is going to get crushed. And you had better be in commodities when it breaks. It's already broken. We're just waiting for the death drop. Let's go to a daily chart. Yeah, it was a lot higher on the day. What did they do? They sold into it. So while we close up on the day, this is not really all that much of a bullish chart. All up days are not created equal. So if this breaks, you better be looking it's going to go up a lot higher. The VIX. Now, the VIX, sometimes I need to refresh. Bullish reversal bar on the week. This, if we close where we're at or high tomorrow, folks, it's not going to be pretty. The bear cakes are putting in lower highs, but price matters most. Let's go to a daily chart, see how we're looking. What? It's a bullish move. I think we may get some backing and filling here. We may not get higher on the VIX, but the volatility is on the transports. That they have broken out this week. The question is, do they hold the breakout? Because what they're about right now, and again, we look at charts, the market sends us a signal. A lot of people use charts. By the signal, but do they act on it? That's the key. You can, well, you're not doing yourself any favors. The market, come on, don't do this. What the market is doing right now is that these wicks, shadows, candlesticks, last week, this week, what the market is saying is this: hey, they're getting out. That's what they're telling you. So I wouldn't be the least surprised tomorrow to see us below the support level. Let's go to the daily chart. Holding support, not broken, but not pretty. So we've given back most of the gains on the week. Folks still look good. Chart, very similar to the Dow transports, topping tails. Again, institution to liquidity. They're finding a pool of liquidity. They're selling. That is institutional selling. How do we know that? All you need to do is this. Take a look. I've been warning for days now. I put this trend line up here is that we're rising, yet we're having fewer buyers support the rally. And trap we might be facing right now. We haven't broken back down yet into this trading. You're going to see situation move lower next week. The S&P 500, again, very similar to the and to the Dow Jones Industrials. Here's where I take my crayon out, and I go like this. Down below, the lows of last month, 4,222, spot 62. It's all over for the S&P 500. Gates of hell open up in terms of algorithming on this market. So how do you protect yourself? If you're on margin, think about lightening up. Remember, if you're on margin, you are not senior partner. Your broker is. Out today without a margin call on your account, but volatility really picks up. They just may raise the requirements on your positions, and you'll wake up the next day with a margin call. You may close out the day with still having $10,000 in buying power. Wake up the next day, and your broker saying, "Hey, send me," or you got to. They'll do it for you. And chat is on my end, or is Bob breaking up? I'm breaking up. Bad audio. Let me make sure my mic is on appropriately. Audio. Testing. 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 Any better? Microsoft looked horrible today. I was tempted to short it myself. I didn't see Tesla yet or Apple. Very poor price action. All right, so I got audio issues. Sorry about that, folks. Sorry. Oh, it's better now, Forrest? Thank you. that it was a denial of service attack on my audio. All right, so hopefully it's resolved. It's like an upload issue more than a mic. Could be a bandwidth issue, but I did make an adjustment on the mic. Sounds better now? Good. Okay. All right. So I forgot where I was in this, but you don't want to see a breakdown to new lower lows. Just think about getting off a margin. Okay. You know, I use margin, but I use my system is this: is that let's say you have I use a 50% net lick. Net lick, if you ever hear, is net liquidity. I always like to keep 50% net liquidity. What does that mean? Let's say you have $1 million account. At any given time, you have no more than half of that, $500,000 in the market, and you keep everything else on the sidelines to take advantage of opportunities like we saw today. So I didn't do much in terms of putting on new trades today. I just lightened up. So that way I have more flexibility if things get ugly, because there are going to be opportunities where you're going to want to trade a counter trend rally, or there are going to be opportunities where you lean into the short side. You got to have that. You have to have that flexibility. A lot of people don't want to do that because it's like an admission that you're wrong. You're not wrong. If you take a small loss, it's a small loss. If you're doing it for a reason, that's fine. You're managing your business. This is a business. So if you're saying I'm never going to sell, what is it, diamond hands? That's craziness. Craziness. You will sell, or your broker's going to do it for you. All right. So weekly chart S&P 500 not looking wonderful. It is unwell. Topping action. Look at this. We broke out yesterday, breakout point failure, also known as a bull trap today. This is bad stuff, folks. And we were down on volume. Note how the up volume bars have been fairly good, but declining. Today, right out of the gates, down volume, above average. And here, look at your ultimate oscillator, your RSI, all putting in lower highs and lower lows, rolling over, despite the move higher on price. That is a bearish divergence. Stokes still look healthy. Daily, oh, I already did the daily chart. That is a daily chart. Small caps, right? You woke up this morning, you were feeling that all was right with the world. If you were holding small caps, we were breaking out above that 205 mark. How are you feeling tonight? Right? If you're going to trade with weekly charts, wait till Thursday or Friday to start putting on trades. Because if you put on a trade on whatever day we went above the 205 mark, you're not feeling good today, because now that breakout point is being rejected. Traders are telling you, no bueno, man. There are way more sellers above than there are buyers. Volume is light so far, but we have one trading day left to go. Daily chart. So what you saw happening back here during the sell-off is beginning to return again. You wake up, even though we had bad economic data, the inflation data, stocks still rallied. What happened by the end of the day? If you chase that rally, you got hammered. Wait until the final hour of trade. It's simple. It's simple. You just got to fight the urge to do anything. Wait till the final hour of trade before you put on a new trade. Because traders, professional traders, they use that final hour to determine what they're going to do. That's when they make their trades. Watch what they do. The Trip Qs. Oh, sorry, the financials. They're up nearly 1.5%. But remember, they like rising yields. But today, though, they were not salvaged. Bearish key reversal bar on volume. Technology, a very weak chart. We are barely up. We've given up. What? Somebody just knocked on my window and scared the shit out of me. You guys laughing or what? We are barely up on the week daily chart. Very similar to what we saw on the S&P 500. Where we are reversing on the week. And the only thing different here is that we held support. Sorry about this. Still an issue with the audio, guys. I'll speed this up. All right, so we went short of the semis this week. I think that this is a bear flag setup, and we're going to roll over. Volume on the week so far is pretty good, and we are up 2.6%. So we shorted into strength, and we doubled our position yesterday at resistance, but today, bearish key reversal. So we are now up on our short of the semis. Volume, very heavy. LABU. All right, so we've been doing rolling option trades on this for the past several weeks, selling naked puts, and we've done quite well. But today, we pulled back on LABU. We sold the 20 naked puts. I closed them out because I think that the fact that we are finding resistance at 20, I don't want to sell the 20 puts. I'd rather allow for a pullback and sell the 15s or the 16s. This may be a retest of support, but I'd rather be safe than sorry, so we closed out that trade. Again, raising capital, adopting a wait-and-see approach, and then we move forward. Consumer discretionaries. I think these are going to get crushed. If inflation is going higher, people are spending more in the grocery store and at the gas station. Oddly enough, the Federal Reserve backs out those numbers out of the inflation data because they believe them to be transitory. How inconvenient. You're going to have less people spending on discretionary goods. Daily chart. Bearish reversal bar on the day. I think the discretionary names go down. What's discretionary? Starbucks. Energy. Energy is even down on the week now. We're still bullish longer term on energy, but it's probably going to come in some. All right. Let's skip to gold. Monthly chart. This is still a very healthy chart. And it appears as though we are going to move up higher. We are holding on to 1830. Despite the selling today in the gold miners, which I thought was nuts, the price of gold is holding 1800, and even more important, 1830 the ounce. Weekly chart. I love this setup. Weekly chart, we are still up on the week. We are in a ever-tightening triangle formation. Our Stokes are doing exactly what we want. Higher lows. RSI doing exactly what we want. Higher lows. And in fact, we now have higher highs on gold. So if you're selling gold because you're worried about the Federal Reserve raising rates, I've already laid out the case of why it's too late. It's too late. That's why you need to be buying gold and silver right now. Go to your financial consultant, make sure it's right for you. Let's go to a daily chart. See how gold behaved today? Closed up. Yet they hammered the gold stocks. It's bananas. Look what they did to the GDXJ. And I've been warning about this, though, and now I just refreshed my own memory. That volume of late during this rally has been very, very light. So it's really no great shock that we got this sell-off. Nugget, of which we trade a lot of options on, tons of options we trade. We sold the 5250 covered calls. They're probably going to expire worthless tomorrow. and we'll open up a new round of covered calls out into next week. So members expect an alert tomorrow. Let's go to the daily chart, see how we closed out. Wasn't pretty. Pretty ugly. On volume, no less. All right, I want to talk about Bitcoin for a moment. Bitcoin is getting hammered. And I warned about this, that during my presentation, it'll come out on the 26th, but I'll give you a sneak preview of the trade I'm looking to put on. Overlaid here, you see this, is microchip techno. Oh, that's the wrong symbol. Save that so I don't make that mistake again. I'll show you the trade. Okay. So overlaid here is MSTR, MicroStrategy. MicroStrategy has borrowed money to buy Bitcoin, a lot of it. They are levered up. Their basis cost is $30,000 per Bitcoin. At the recent low, we hit a low of 32,990 spot 72. I'm looking to short MicroStrategy if Bitcoin continues down lower, because the correlation between the two using a daily chart is they trade together 81% of the time. Those are pretty good odds that if Bitcoin rolls over, so shall MicroStrategy. And if MicroStrategy sees a Bitcoin price down below 30K, their basis cost, that means a lot of trouble. And even more staggering correlations when you go to a weekly chart, they trade together 96% of the time. So members, more on that trade. All right, let's do some chart requests and let's, wow, I'm already past 7 o'clock. Damn it. All right, I'm going to blow through these. Joe for Franklin. All right, so Joe hit a my alert expired here. I don't know if you remember this. We've put up an alert here, Franklin, on TrendSpider that should fire off once we hit resistance. And I see that we pulled right back off of that resistance level today. We broke out yesterday and gave it up today. Weekly chart still looks really good. So if I was short-term swing trader, I would probably look to book profits and re-enter down here on a retest of 67.23. If you're an investor, stay long. Rising Stokes. Monthly chart still looks good. But just beware. We broke out yesterday. We gave up that support level today. Breakout point failure. So expect more short-term weakness here on Joe. My guess. All right. Diz. We traded earnings on Disney, did very, very well. Stokes are looking really good. I'm just going to go over the weekly and daily charts. Really good. One trading day left to go. Right now, we're beginning to see a breakout and a higher low on Stokes. So we're building momentum. The problem here is that you have resistance. What I just did is I just triggered an overlay on top of a weekly chart of monthly resistance. Where do we stop today? Just shy of resistance on Disney. So we may creep up higher here. Just be aware that you have resistance up at, I may short Disney, up at 160 per share. All right. BKKT. We have a breakout on the week. Expect a retest because we got stopped right at another resistance level. And folks, I did not draw these trend lines. The software did. So don't forget TrendSpider, 35% below, discount. If I take them off, they're gone. Put them back on. Now you know where your resistance is. So beware here. Currently, we have a breakout, one trading day left to go. If we close out the week, expect a retest of the breakout point next week at about 675 daily chart. It's looking good. I just don't like the topping action at resistance. If you break out above $8 a share, I like it. It'll be game on. I wouldn't buy it right now, though. It's at resistance. I want to see a breakout. ARKK. Oh, this is going to be a good one. I'll tell you right now, I already looked at the chart earlier. And it doesn't look good. All right. So daily chart, we have broken out. We were in a downtrend channel, but we've done this before. We broke out here, failed. Here, failed. Attempted breakout here, failed. Attempted breakout here, failed. Do we do it again? I don't know. But it's not looking good. In fact, I would update the algorithm to reflect a new upper band of resistance because we rallied up and into it yesterday or today, and we were rejected. We are holding support. But I want to know if we break the support level. If we do, I'll be selling probably naked calls. I know a lot of you are out there saying, man, that's crazy to sell naked calls. If you're using a probability calculator and not buying a stock that can get bought out, it's workable. We do quite well with it. Selling naked calls on an individual stock, very, very dangerous. Because you wake up one day and the company's getting bought out and they're buying it out above your strike price. You're wiped out. So we do, to be fair, we have a breakout. Maybe this is going to be a retest of the breakout point on ARC and it breaks out higher. That's why I'm waiting to see if we close back down below this lower band of support before I short it. And keep in mind also that I have overlaid on a daily chart weekly support in dashed line. So even if we do close back down below, this daily line in green, we have a weekly support level immediately below that may act as support. So I'm not quick at the trigger here to short ARK because you do have support levels that are being tested. Now, this is what I don't like. I think that this is a bear flag setup. And if we break this lower band of support, oddly enough, where the algorithm is picking up support, it's going a lot lower. Daily chart. We already went over the daily chart. That's ARK. Tesla. Now, this is a monthly chart of Tesla. It likes the 889 level, and it's holding it. Stokes are very, very overbought and rolling over. Weekly chart. I think this could be a bear flag setup here. I think it's a short if it closes down below 889. So our alert is set. Daily chart. At a bare minimum, we're going to retrace back down to this breakout point. So I would wait for support to break before I shorted it. If you buy it, just use a tight stop right below that 889 level. UEC. Oh, uranium energy. Interesting. Monthly chart. An inside month. No new low, no new high. I don't like the Stokes. Lower highs, lower lows. Don't like that. Weekly chart. I do not like the weekly chart. Unless it rallies back tomorrow. I don't like to see topping action. And that's what this wick implies. And again, you would have known to get out if you had an alert set right here using. Actually, this is my manual. I must have seen this before because I drew this line. Yeah, I drew that line. All right, so I don't like the topping action. I have a bearish bias towards it right now in the short term. It attempted to break out today, but was rejected. You got to get a close above 330 per share, 340 per share, and let it bounce around there, retest, then it's a buy. Right now, very speculative. You're up and into resistance. Does it hold? Does it not hold? I don't know, right? It's one of those situations where you don't know. I would be, if I bought down here, I'd be selling here as a swing trader. I'd buy back in on a pullback, or if I didn't own the shares, I would be waiting for a breakout above 330 per share. Then I pull the trigger on UEC. BF. Brown and Foreman. These are preferred shares. I don't know what this company does. It's in a downtrend on a weekly time frame. It's struggling right now. You got resistance right up at 68.52. Again, this is another situation where If it breaks out above 68.52, I'd be a buyer. It's not a horrible chart. It's simply consolidating, but with the biases to the downside. So unless we start putting in higher lows and higher highs, I can't get excited about it. So I'd wait for the breakout, or I'd wait for a retrace back down here to the lower band of support. Keep a little bit of sensitivity on. Keep it active for a while. And for the new folks out there to trading, the reason why I do this is that we use a rules-based approach. If this, then that. So I wouldn't touch this stock unless my alerts fire off. Now, what if it never retraces back down here, but you love the stock? You got to have the stock. When do you buy it? You buy it up here on a breakout. Zero sensitivity. All you care about is a close above that mark. And there you have it. What I do like here is that you have higher lows on Stokes. So momentum is beginning to improve, which is good to see. But just keep in mind, short term, I wouldn't buy it. You're at resistance. Daily chart. This is interesting. We broke out yesterday, and today you could argue we closed back down below the support level. Let's be nice and conservative. We closed at it. You could look to buy the stock again using that that resistance level at around 68.30, 68.50, even better. But right now it's struggling to hold on to support. So I would buy it on a continuation move up higher, above resistance. I'm going to leave it off with DWAC. My salty army friends out there. All right. So we're long of DWAC. Monthly chart, it's very extended. We're waiting for announcements. We're waiting for headline news. I think that what we're going to get on that headline news is a spurt up higher and then selling into strength. So on that news, if we spike up higher, I will be a seller of the shares. So just be aware. Weekly chart. We were higher. We've given up a lot of real estate. So we're struggling here at 88.39. I think it's a $100 stock. Stokes is still rising, which is good. So we could still have more upside potential here. But we're struggling right now at a resistance level. Daily chart. Again, more resistance above. So would I buy the stock here? No, I'm already sitting in a profit on the shares. So I have room to wait. Even if it pulls back a couple of percentage points, I still have a profit built in there. So to initiate a new position, I wouldn't do that. I'd wait for a close above 88.50. Why would you want to pay more is the logical question that you might be asking if you're not familiar with trading using technical analysis. Why wouldn't you just buy now? The reason is that trading stocks, especially options, is all about probabilities. So you want to enter a trade with the highest probability possible of making money. So if you buy right now, you have to hope that you rally up and through resistance. But I always like to say, hope is not a strategy. You need to wait for the breakout above resistance. And if you close above that mark, even pull back and do a retest of what was resistance is now support, your probabilities go like this, a lot higher of probably making money because you've rallied through resistance. So that's why you wait and you pay a little bit more. Stokes looking really good. I'm going to close it out. Hey, Bob, question. Have you heard of David Hunter calling for a melt? Yeah, I saw that on Twitter. I saw that on Twitter. I don't know how he gets there. I've seen a few tweets of his. As a matter of fact, I think I follow him. That's why I saw his tweets. I don't know how he gets there. I'll have to read the thread. I think the only way that you're going to get to that level is more QE. I mean, that's a huge move up higher. I mean, it's literally off the charts. That would be literally off the charts. It's in excess of another 45% move up higher in the stock market from here. I don't see it happening. I just don't see it happening. I think that if we get a massive correction and the Fed blinks and says, okay, more QE, we're back, then you'll see a rally up. Not until then. Dave H. Contrarian, he's made some videos as well. Okay. Hey, Denny. Paul, good stuff tonight. Hit the like button. Yes, please hit the like button. I always forget that. Thanks for you guys. Hit the like button. Smash, destroy it, follow the channel. Helps me out a lot. All right, everyone. Everybody have a great night. Thanks for being here. And have a great night. Yeah, 40%. Yeah, that's about right. Have a great night, all. Be well.